It's Monday, the 2nd of August 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. In today's headlines, earnings season kicks off this week with the resources, financial services and media companies tipped to star. Plus, Queensland goes into lockdown and New South Wales COVID cases surge. National Australia Bank rewards shareholders with a massive buyback. And carbon farming is becoming a lucrative business in Australia. Our lead story today, earnings season kicks off this week amid rising numbers of COVID cases and forecasts that the economy will contract during the current quarter. With the share market trading close to record levels, over the next 4 weeks, the majority of listed companies will outline their profits for the 6 months to the end of June. Already Rio Tinto has announced its results, which included a bumper dividend payout. National Australia Bank last week announced a $2.5 billion share buyback, but Origin Energy said it would write off $2.25 billion on the back of its poor performance. Across the bourse, expectations are for a 49% rise in earnings for the full financial year, albeit off a low base, and for a massive 56% jump in dividends. Resource companies are expected to nearly double profits thanks to higher commodity prices, and banks and media companies are expected to perform well, reflecting a strong housing sector and consumer spending. Telcos, general industrials and utilities are not expected to do as well. Stocks are relatively expensive at the moment, or in investor parlance, valuations are stretched. Normally that means it isn't a good time to buy the market, but the confidence of the economic recovery post-COVID is such that many tipsters expect prices to keep rising. However, that confidence has been dented somewhat by the COVID lockdowns in eastern states. Uncertainty is the enemy of share price growth, and investors will be watching closely for chief executive commentary. It's going to be a very interesting few weeks. In overseas news, Wall Street fell over the weekend with investors concerned about a slowdown in the huge technology companies. Amazon fell 7.6%, its worst daily drop since May 2020, after its earnings for the June quarter disappointed analysts. On top of Facebook and Apple's cautious outlook statements, investors sold down tech stocks, sending the Nasdaq lower. The Chinese leadership said it would more tightly supervise overseas share listings, suggesting more rules for the private sector. Already technology and education stocks have been hammered by new rules out of Beijing. The news won't be good for companies listed on overseas bourses, particularly Wall Street. And he's back. Sort of. Donald Trump raised more than $100 million during the first half of this year, more than any other Republican. The amount is unprecedented for a former president. It's not clear what he's going to use the money for, but it does demonstrate his influence over the Republican Party. Locally, there was a surge in COVID cases over the weekend. Queensland recorded 9 new cases yesterday and 7 on Saturday, triggering a lockdown for Greater Brisbane and the closure of a number of schools. Queensland had been a shining light, and the shutdown triggered delays and postponements of sporting matches. In New South Wales, numbers continue to oscillate around the 200-a-day level, with 239 cases announced yesterday. Around 60% of cases were people under the age of 39, and the majority of cases were from West or Southwest Sydney. Victoria reported 6 more cases over the weekend. Federal and state governments are now pushing for a 70% adult vaccination rate. That would allow fewer restrictions, travel would open up, and lockdowns would be less stringent. Prime Minister Scott Morrison is hopeful that will be reached by Christmas. National Australia Bank will buy back up to $2.5 billion in shares as it offloads excess capital that it raised just 15 months ago. The bank has also sold MLC Wealth and has about $8.5 billion worth of excess money on its balance sheet. Chief Executive Ross McEwen said the bank could support customers in lockdown cities and undertake a share buyback all at once. Carbon farming is becoming big business in Australia. Over the weekend, Japanese conglomerate Mitsubishi said it had bought 40% of Australian Integrated Carbon, a carbon farming business. In May, another Japanese group, Mitsui, bought Outback Carbon. And earlier in the year, a group backed by the government-funded Clean Energy Finance Corporation bought Climate Friendly. Carbon farms are carbon offset projects that change land use or management practices to store carbon or reduce greenhouse gas emissions. The Japanese giants can access the carbon credits to offset their own emissions. Carbon farming is a business of the future. And finally, the Olympics. Seven has been enjoying record ratings during the Games, with about 3 in 5 people tuning in. The group's streaming service has also reached around 16.6 million people, beating all previous records. And what a weekend! More gold in the pool, one for the BMX riders, one in a laser boat, and an Australian star is born in the 100 metres. That's quite the hairdo, Rowan Browning. But my favourite moment was the 100-metre dashes for men and women, two new champions, and in the men's race from a country, Italy, not known for sprinting. That's the Fear and Greed business headlines for today. Make sure you hit follow so you get it every morning. And if you'd like more detail and more stories, search for our longer daily podcast called Fear and Greed. We also release a daily interview. Today, we're talking to a company listing on the ASX this month, promising the holy grail of batteries. I'll be back later with the afternoon market report. I'm Sean Aylmer. Have a great day.